Well, good morning, everybody, and thank you very much for being here. Thank you for lending us your time and your thoughts and considerations to all of the presenters here. And thank you, of course, to Reed Corporate and the team for hosting such a good event and a series of events. RareX is essentially an electric vehicle raw material supplier. We've got a pipeline of exploration projects, mostly in WA, mostly up in the Kimberley. And we have a relatively near-term operational asset at Cummins Range, which is a rare earth and phosphate deposit where the rare earths are suitable for magnets and the phosphate is suitable for the lithium iron phosphate battery market. The presentation is on our platform, so please have a look at it. Have a look at this as well as, because I'm sure this is very interesting to all of you, the disclaimer, but also do have a look at the appendix. There's a lot more information on the project in the appendix, and it'll give you a greater insight into the business. But I want to take a moment just to go back in time as to why the company exists in the first place. It was formed around about 2018, 2019, under the fundamental belief that we were entering a green energy and electric revolution, and that was going to be unstoppable. And the founding directors decided that rare earths was going to be the material, the commodity that needed to be focused on. And they put this business together. Now, that vision has been reflected now in the tremendous amount of money that's being spent by global governments in achieving net zero ambitions in relatively short timeframes, and the money that's going into electric vehicles and renewable energy generation, particularly into wind turbines. I mean, the numbers on the screen, they're really quite remarkable. And through this vision, they acquired the Cummins Range deposit. It was a known rare earth deposit, and we've since expanded what we understand about it. Poetically, in our search for more rare earths and our understanding of that, we found that the project contains phosphate, and it's phosphate in an apatite mineral that's very, very suitable to the lithium iron phosphate space. So it's a very poetic discovery within that deposit, because the lithium ion battery market really cements the electric vehicle space where a lot of the rare earths are used in the magnet motors, and the wind turbine generation space where the magnets are used in the generators, because of the batteries that underpin both of those technologies. So following on from this, and then let me see if I can change this. Following on from this genesis, we now really have a value proposition of three parts. We have the Cummins Range rare earth and phosphate deposit. It's a high value, low cost, fast tracked deposit because we can monetize the overburden and get going very quickly. And it is fundamentally based on Australia's largest undeveloped rare earth resource. We also have the rare exploration arm of the business. This has got the assets of the secondary tenements. They're all rare earth focused, they're all synergistic, they're largely in WA. We also, under this arm of the business, curate and manage our investments in similarly thematic businesses that are listed entities. And of course, to tie both of these streams together, we have a very capable team. The board have got a very clear, proven track record of success in building and operating mines, and the management team have all largely come from an operational background. So it's a very good value proposition, which unfortunately is currently not reflected in our share price. I think importantly, if you compare ourselves to our peer group, we have performed better than most, which is a very good validation of the path we're on. Also importantly, everything we have is 100% owned. The management and the founding directors are really very heavily invested in both RareX, the business, and the investments that we have in listed companies. So it's fundamentally a very good corporate to come in. I think with the rare earth prices probably coming out of their trough and the market sentiment probably due for a change in the not too distant future, it's a very good time to consider this business into investment portfolios. The Cummins Range project is really our flagship. It's at a scoping level, but it's a very advanced scoping level. And as I mentioned, do check out some of the releases that we've got. We do go into quite a considerable bit of detail. It is low cost, it is low risk, and it is a very fast tracked project compared to our peer group in particular. The project is 135 kilometers southwest of Halls Creek. It's on an emerging minerals corridor. The Tanami Road is being sealed as we speak. We took pictures of that the other day. We've defined it to a scoping study level to produce a combined mineral concentrate of apatite and monazite. Apatite containing very clean phosphate, monazite containing very good rare earths in the NdPr-dominated space. We've defined about 500,000 tons worth of bulk material that can move from this project up the corridor over a period of about 18 years. Now, the supply chain is really key. Because this is a bulk commodity, the supply chain is key. So if we work from the top of the picture there, we have just signed a deal with Kimberley Metals Group that own the iron ore loading facility at Wyndham. This gives us more capacity than we need to get bulk commodities onto a Supramax vessel at the port. We do have arrangements in place to secure 4 hectares of land right adjacent to that mineral loading facility. We're working on a trucking joint venture contract up there. We're doing training agreements with the East Kimberley Job Pathway, and we're about to appoint our mining contractor. So really, we are putting that supply chain in place. And importantly, we've just signed our first MOU for offtake as well. So the offtake is with Nitron, a very significant fertilizer company, which will take the overburden material and that will pay for itself, and then part of the mineral concentrate product. The economics defined are very attractive, and they're also very conservative. I'm a British engineer, so I'm a conservative person by nature, and we've built in a lot of contingency, we've built in sustaining capital, government taxes and royalties, native title royalties and contributions. We've put in a significant amount of contingency into the costs. And another thing that's really worth looking at is what have the pricing assumptions been for the products. We've put in very conservative pricing assumptions. We've compared those against our peers, so that's all available for you to see. And we've discounted those prices for both market incentivization and value chain position. So I think a very robust project. It is underpinned by Australia's largest rare earth resource that is undeveloped. This graph does not show that exactly. This graph shows the ton grade curve when we normalize to 1% TREO, which is very comparable against our peers. You can see we're third largest of the undeveloped projects in Australia, behind only the Dubbo project, which is a very complicated resource, and similarly complex Arafura's resource. So it's a very, very significant deposit. And this graph, those green dots, show where our market capitalization exists. So I think we have a tremendous amount of upside based on these fundamentals. Because of this, and because of the work we've done, we can move quite rapidly. I would encourage you again to take the time to have a look at this in more detail after the presentation or come to talk to me. But we have done most of the drilling on site. We've done almost all the drilling needed to be done on site. It's now a case of developing it. We are focused initially on developing the quarry mine, which is the overburden material. We can get that approved next year and move that into operations in 2025. Meanwhile, doing the more advanced engineering on the more complex component, which is the beneficiation plant, which generates the combined mineral concentrate product. That is where the real value kicks in. So it is incumbent upon us and the team to bring that forward as fast as possible, but we obviously must take into consideration the risk there. So we're working on these streams as we speak, and so we can have a monetized asset within a couple of years. And that'll produce this combined mineral concentrate. It is apatite and monazite together. We sell the apatite, that gets used in the LFP battery sector via the phosphoric acid pathway, and then we on-sell the monazite, which is where the rare earths sit. We have done an MOU offtake agreement with Nitron for both stages of the project for 250,000 tons. We continue to work on those work streams to provide greater competitive tension among potential buyers. And those products go into the magnet sector and they go into the battery sector. A lot of people understand the supply chain constraints when it comes to the rare earths going into magnets, in both the magnets in the electric motors and the magnets in the wind turbine generators. But there's a very, very similar thematic with the LFP battery space. That is a very, very supply chain constrained sector through China. And I was in Northeast Asia recently in Tokyo, and that was very much the conversation there was how much South Korea and Japan are trying to move away from that reliance upon the LFP sector. So it's a very nice combination. Now, with all this work that we've done, we're able to compare ourselves very nicely against our peers, and everything is fully referenced, which is why the ASX have allowed us to put this on our platforms. The top graph is essentially our reserves. What you can see from here is that we've got more tons at comparable grade to any of our peers, which is really quite significant. The second graph, the lower one, this shows how efficient and low risk the project is going to be. We can produce, when it's developed, more rare earths for lower capital expenditure than anyone else. This is what makes it super low risk. This is what makes it relatively fast-tracked. This is what makes it low cost. You know, this project is less than 350 million Australian dollars to develop in its entirety. So that's quite significant compared to peers. So, as you can tell, I'm very enthusiastic about the Cummins Range project, but it is not the whole business. Rare Exploration is the other part of the business. This looks after our secondary tenements, which are all around the rare earth thematic, and it looks after our investments, which are all very similarly aligned. The geologists have been prioritizing and working through this. The first thing they've been focusing on is what is next door to the carbonatite intrusion at Cummins Range. These things often form in swarms coming from the magma chambers. We've just done the geophysics surveys. We're augmenting that with historical work. And you can see there that there's the potential for 3 other carbonatite intrusions surrounding Cummins Range. Now, anything that we find here is either an extension to the mine life or an increase in scale. So really quite exciting. We're moving on to target generation very quickly, and we'll be looking into this a lot more detail in Q1 next year. Further afield, but still in the East Kimberley, we've got the Mount Mansbridge project and Maud Creek. Mount Mansbridge is the Killy formation, so it's heavy rare earths. It's near Browns Range, which many of you who invest in rare earths will have heard of. And Maud Creek is a kimberlite pipe with xenotime in it. Again, heavy rare earths. It's not far away from Argyle Diamond Mine. We've been told to look at the bush turkeys if ever we see a dead one, because there's probably diamonds in its belly. So we're not there for the diamonds. I'm sure some of you might be interested in that, but we're there for the xenotime. And so we are going to be moving into this space as well early next year and putting together targets out here. And then we have the non-Kimberley projects in East Yilgarn, and it is Red Dragon that the geologists are most keen about, a very interesting high magnetic anomaly. We've got a project geologist focused on this as we speak. So a really nice collection of projects, and we are growing those exploration bases. We've got a very nice position, certainly up in the Kimberley, which we're leveraging. We're sort of minor celebrities whenever we go up there, which is rather nice. And then, of course, we have our investments. These investments we've got in Kincora, copper. We've got in Cosmos, which is sort of lithium in Canada, and we have Canadian rare earth. So we look to build these up, curate them as we go. And of course, the team are most critical to this. The team tie it all together. Not only is it needing to be the right team, but it needs to have a belief in doing things the right way. The board, very significant. If you have a look at some of those, you'll notice some of the characters. John Young is sitting in the audience here, built mines very successfully. Cameron Henry found and built Primero engineering company, which build and operate processing plants. Danny Gorman, he used to be my CEO when I was with Danakali a few years ago, and he's here to guide us through the offtake piece, and as you can see, the fruits of early labours coming through already. He's a senior marketing, sales and shipping executive, having led the global division for FMG as his most recent appointment. And then the management team are very much operationally based. They've done it in tier 1 companies. They've done this in the junior sector as well. So we're very well formed for taking both arms of this business together. And of course, doing it in the right way is also very important. We wanted to make sure that we're not greenwashing the project in any way, any of our projects. We went out and looked at what stakeholders are looking for in terms of what we report against, both now and in the future for when we have more mature senior investment and government interest in the organisation. And so we've laid down a track record of putting out our obligations, putting out our commitments, and tracking ourselves against them, small as they are right now, but it leaves a track record, a public track record of us doing the right thing. We're about to put out our 2023 sustainability report. And because everything we do needs to be governed by this, and everything we do is a rather large amount, this is really something to digest after the presentation. We've got an awful lot of milestones related to developing the initial part of the project at Cummins Range and turning that into an operational asset in 2025. In parallel, we've got a lot of the engineering work on the beneficiation plant being done so that we can move that as quickly as possible, because that is where the value is driven for Cummins Range. And then we have all of the milestones that we're going to be meeting in target generation and field work for all of our supplementary assets. So I really encourage you to follow us. I really encourage you to engage and have a conversation with us. And I look forward to speaking to you at the booth afterwards. Thank you.